Okay, can you see my chart?
Sorry?
Can you see the chart?
No, no, no. It's just your picture showing you.
Okay, I'm coming.
Okay.
Okay, what about now?
So it's still okay. It has come now.
Wonderful. Okay. So today we are going to learn about what risk and reward management, which is very important as a trader. You should know these things because there are three phases to forex trading if you want to learn. First of all, you have to have a strategy. Secondly, you have to also master risk and reward. Then the third thing is the psychology. And the risk to reward is 30%, whilst your strategy is just 10% of the whole game. And your psychology is what 60%, making 100%. So today I want to teach you about the risk and reward. Then we'll do some small markups for the week, where price will be going to for the week. Then we'll see how things will turn up. So for risk and reward, we have different types. We have, you can say you want to risk one is to what? Maybe two. That's the least. Some people risk 1:1, but it's not advisable. It's not a good thing. And you can also risk, um, let's say 1:3, and also you can risk 1:4 and above. It can go some maybe 1:20. Some people can do that. 1:4. It depends on you. So first of all, what is the one and what is the two? We start with the risk. One is the risk. So risk is to what? Reward. Good. We are trading in order to gain profit. So we are supposed to what? Lose small to gain big. That's the thing. Lose small to gain big. Anybody who wants to do fishing, which they will use this line and hook fishing, they put small fish on the hook, and when they throw it inside, they are expecting to catch a big fish with that small hook. That's how it is. Every investor wants to put some money inside, which is small, and uh, as time goes on, should what greatly increase. So that will be a profitable trade. But if you put maybe a big uh, loss or risk inside and you gain small, it's not fair to you as the investor. So this 1:2 means that you are risking one, whether it's 1%, you are risking one for two. So you are risking one for two of that one you are risking. Let's take, for instance, um, you are risking, let's say your account is $100. Let's say you have an $100 account, and you purpose in your heart to risk 10% per every trade you take. So 10% of $100 will be what? $10, right? I hope you are here.
Yeah, I'm with you.
Wonderful. So 10% of $100 will be $10. So this means that we are risking $10 for two. The two means two times your risk, which is a $10. So that means you are risking $10 for 20. So if price should go our way, as we predicted, then we should get $20 profit. If price doesn't go our way, as we predicted, then you are ready to risk $10. That's what it means. I am ready to risk $10. But if it should go my way, I know that I will get what, $20. The same thing applies to here. If you are still risking 10% of the $100, then that means you'll be getting $30. When it comes to 1:3 risk to reward, you'll be getting 30 That will be 30, 30. And sorry, that will be 30. And this side, you'll be getting what? 40. You see, that's how it is. So you are risking $10 for 20, $10 for 30, and $10 for what? 40. But it depends on your risk to reward. The risk to reward is that we use these two, this long and short two. There are two. So where the red is the risk. And where the green is the reward. You can change the color into any color you want, but this is the default color. So for example, if you see the red is small, now the green is big. When you check this place, you see what OPPNL, 0. What. And also that shows that that's the exact place you place your trade. The price you place your trade was what? 0. What. Then you come to what's the down. You see what risk slash reward ratio, 2.8. This means that you are risking 1 for 2.8 profit. But if you should push the green up a little bit, you see that it will be changing. Now look at it too. It has changed to what? 3. That means if here is $10, here is $30. If here is $10, then here is $30. If we should push it up to 4, okay, almost good. So let's say 4. So now if you are risking $10, then you are gaining what? $40. Risking $10 for $40. So let's say maybe for instance you picked your trade here. You see, it has hit TP. That means you have gained what? $40. If your account or your profit zone is around 3, then that means you've gained what? $30. If it's around 2, you've gained what? $20. That's how it is. But how important is this risk to reward ratio? How is it important in our trading? Why is it so important? Let me show you why it's important. The reason why it's important because we are going to check the number of trades we can take, and if we should use 1:3 and 1:4, what we'll be getting, and also 1:2, the results we'll be getting. If we should lose 5 trades and win 5 trades in maybe a total of 10 trades we take, if we should win 5 and lose 5, the reason why risk to reward is very important in trading, that's what I'm going to show you. So now let's take this same thing and bring it here, this one and this one. Now, with the same $100 that we are risking the same, as in our account size is $100 and we are risking 10%, only 10%. But in this 10%, all we are saying is that we have a loss of what? $5. Hey, sorry, 5 trade loss. 5 trade loss. And also we have what? 5 trade profit. Why did it crack? Okay, I'm going. 5 trade loss. Then we have 5 trade profit. Okay, so now we are risking 1:2 and we are risking this. So in case all the 5 trades we take, the early 5 trades, we lose the trade. That means we are losing what? $50. That's the thing. No, we are losing what? $50 for the 1:2. All the 5 trades, we are losing what? $50. Because every trade we lose $10. And every trade we win what? We win $20. Yes, for 1:2. I hope you get it.
Yeah.
Wonderful. So now we are in total of the 5 trade we've lost consecutively $10, $10, $10, $10, 5 times. So we have $50. So now our account has reduced to from 100 to what? $50. Now we've also won 5 trades, and every trade gives us $20 because of 1 is to
Yes.
2. Yes. So now the 20 times the 5 trades gives us what? 100. So
Hence.
you get it?
Yes.
Wonderful. So, oh, sorry. So that gives us 100. Gives us $100. Good. So this 100 plus the 50 that is left to give us what? 150. That means that we gain $50 in profit. After the 10 trades of loss and what gain, we've gained $50 profit. Do you understand?
Yes, I do.
Wonderful. Now let's see whether if we should be using the 1:3 ratio, what will we be getting? Now we'll still get the same thing as this one. I bet you agree with me because the same risk, we are still risking $10, but just that
Yes.
our profits has increased. Now this one will be 5 trades, but now every trade we win is $30 instead of 20. So it will be what? It will give
Yes.
us 150. We'll be getting 150. Get 150. Yes. So now we get $150. And then this $150, first of all, we lost $50 from the 100, and we're left with $50. Now we got profit of 150 in addition. That will give us what? $200.
200.
That means apart from the capital, we've made extra 100 when you use 1:3. Now let's use 1:4 risk to reward. The same thing, 5 trade loss will still lose $50, but we've increased our gain. Now, our gain will give us how much? 20. It's asking 200. Our gain will give us 200 because now every win we get $40. So 40 times 5 is 200. Now, on this 200, we've lost what? 50. So when you subtract the 50 from the main capital, it's left with 50. Now the 50 plus now our new profit will give us what? 250. Now when you subtract the capital from it, you have gained an additional $150 in your account. So you see why risk to reward is important. Even though you've lost 5 trades and you've won 5 trades. Now let's see where we can lose maybe, let's say, 7 trades and win 3 trades. Let's see something. Okay, so we are losing 7 for, so you see, when I finish this one, you will now be clear on which of the risk to reward is very important. At least it's very important. We can give you profit at the end of the time. Okay, now let's see. We are losing what? 7 trades. Each trade we are risking $10 as usual. So now let's say we are risking $10. So now it will be what? $70. We are risking $10. Now we'll get to what? $70. And the same to apply to all these trade. Yes, so $70, $70, $70. Now we are winning only 3 trades. Sorry. So when we win 3 trades, that will be what? One trade will give us $20. And we are winning 3. That will give us what? Molly, are you here?
Yeah, I'm with you. Sorry, are you asking me?
Yes. I'm saying now we are winning only 3 trades. And now
Okay.
we are risking $10. So when we win $1, hey, sorry, when we win using the 1:2 risk to reward, how many dollars are
Okay.
we getting when we win 3 trades?
So this one, yeah, you still win 20. You will still get $20 as a profit.
Yes, you get $20 per trade. So now the three
Yeah.
trades will be how many in total? $60.
Yeah, $60.
Yes, because now every trade is 20, 20, so $60. Now when we go here, I'm trying to see which of them is profitable. When we go here, we are we have 1:3. Every trade is what? $30. Now we are winning what? Three trades. That will give us what? 90.
Yes, you have 90.
Yes. And then we go to here, 1:4. We are getting 3 trades. One will give us what? $40. Now 40 times 3 will give us what? 120.
Yes.
Okay. So now which one is profitable? When you subtract 70 from 60, that means even this $70, oh, if you've taken it out from 100, it's left with how much?
$30.
Yes. And that $30, we are able to make $60 in addition. How much have we gotten now?
Now we will still have 90. We will still have $90.
Yes. So now it's less our capital. You see, that means we've lost $10 from the capital.
Yes.
Yes, when you are using 1:2. But let's take 1:3. Now we have what? 90. First of all, we had minus 70, which gave us what? 30 left. Then we're able to win 3 trades, which gave us 90. Now the total be what? 120. That means we have additional
Yes.
of 20. So now this one is profitable. You see, 1:3 is a profitable uh, risk to reward. Then we take 1:4. That one we gain what? We lost 70. That means it's left with 30. And we gain 120 from only 3 trades. When you add the 30 to it, it's what? 150. That means you gain $50 extra. So 1:4 is always profitable. So this is risk to reward. So when you choose the risk to reward I want to use by selling, you just bring it down, you bring the green down, then 1:3, or by buying, whereby you just put it there and increase the profit zone to 1:3, and you know that that's it. Even if you lose and you get other trades, they can cover the losses. That's how it is. If you lose one trade and the next trade you win, you'll be up twice because that trade will cover one loss. Then be up twice. That's how we move. That's how it is. So now let's mark up the trades. Or do you have any question?
Oh, no, no. Everything is clear.
It's clear. Wonderful.
Yeah.
So I want us to mark up the charts. Which of the pairs are you trying to analyze today so that I see whether I can help?
Oh, I'm still on this thing. GPB and then United States dollars. Yeah.
GBP, as in GBP USD,
Yeah.
this one.
Yes.
Okay. Let's see. Okay, wonderful. So this is the weekly, and this is what you are seeing on the weekly. We are seeing that price is what on a downtrend on the weekly. Price is coming down, went here, came down, now trying to do an uptrend to this zone. So let's see what you see on daily. Good. So currently it's on an uptrend. What are we seeing? We are seeing that price is moving like this, like that, like this, like that, and then moved up like that, and now has gone up and it's coming down. So you see, this is what we are seeing. What structure is it? It's an uptrend. Price is going up. It's an uptrend. That's on the daily. So now we'll start marking our charts on the daily, from the daily going. First off, we'll mark the key levels. For we don't mark the wicks, we mark the body. So you find the body of this place, which is the resistance broken, then into support. This was a resistance that when price reached there, it came down. Now it has been broken. So it has turned into a support. Instead of a resistance, now a support. So this current price that's coming, the black candle. So we'll see whether we'll find an entry to what? Buy from there. So now you mark it, then you name it. I've already done a template on them. So I can just type daily zone. So you name it so that at least when price reaches there, you can know what. Then I mark this one. That's my daily support. Then I mark the top. Daily resistance. Okay, then another one. This is a key level, a very important key level. Price didn't come there. So price might be able to break here. Price doesn't come here. So it can actually come down, break here, retest it, then come here before going up. Price can do that, but maybe it will not do that. So let's see how it reacts here on 4 hour. So you go to 4 hour. And on 4 hour, okay, the key level is actually the same as the daily. I found another one here. Price moved here, here, here. See, price came from here. We saw a reaction here before going up. See, so it's also an important zone. Okay, so that's the 4 hour key level I've seen here. 4 hour. Okay, so now this is what you are seeing. The end of our chart is on the 4 hour. Now price has come towards the support zone, the daily zone, and we can see that there's a rejection. The candle that closed before the market closed on Friday showed a rejection, a 4 hour rejection. That means price will likely what move from here to the top. That's what you're seeing because already price is in an uptrend. So this is a correction and then we are waiting for the impulse. So price might what move uptrend. So that's basically what we'll be waiting for. So let's see whether we have a daily zone. For daily, we have something like this. We have something here on the daily. I would like to use the rectangle for that. So this is a daily zone. This is a daily zone. Okay. So now what we'll be expecting is that price, this one, we can even take our first trade here because this has given us what a morning star on a support. We can take our first trade here, support uh, our risk will be under it. Then we have what? 1:3.9. We don't want to, we want 1:3, 1:3. So you see, that's how we do it, 1:3. So this is where you can target, or you target the other high of the market, which is here. That will give us 1:3.81, almost 1:4, which is or even better. Or you can wait for price to break this zone, come and retest it. Then you find an entry, which is engulfing candles or morning star or bullish engulfing. Then you buy to this level. So this is what I'm expecting on GBP USD. You see, this is what I'm expecting on GBP USD. Let me take a picture and send it on the page. Okay, then let's see GBP, JPY. Okay, GJ. So GJ on weekly. On weekly, we saw something like this, a push, exhaustion, push, exhaustion, push, exhaustion. Okay, so with this, we are seeing that the market is currently on a downtrend at this side. The market is on a downtrend. At this side, it's on a downtrend. High, low, higher, high. Sorry, uh, lower high, lower low, lower high, lower low, lower high, and it's going lower low. So let's see how we can analyze it and follow it downwards. So we'll go to what? Daily. So on daily, we still see that the trend is going what? Down. So we'll mark our key zones. This is our daily support at the moment. Price which then went up. So it's a daily support at the moment where price can get to very quickly. And then we have another one, our daily resistance. This is where price also moved from. If we can check, you see that it's a key level. Price has respected that level. It's respected it here, came down, went up. The same thing here, came down. It respected it like this, came here, went up some more, came down, broke it, respected it, went up, came down, went up, came down. The same zone has been respected several times. So it's a good zone. So that's our daily resistance. Good. Now we can also see that price moved from this zone. Yes, this very zone. That's good. Okay, so we mark this zone. This is also a daily zone. Daily zone. Okay, so I don't think we see any, there's no other relevant zone here. So go to 4 hour. And now on 4 hour, what do we see? We have to look at structure. We see that price is confirming our downtrend. We have a high, a lower high, we have a lower low, we have a lower high, and price is creating a lower low. So you're expecting price what get to this level from here. We're expecting price to get there. But let's mark our 4 hour zones. We have one zone here where price came back, pulled back, it broke, pulled back to that zone and sold. Yes. And let's name it first. Key level. And then we have this one as another key level where price might likely reach then bounce down. So we can expect price to move back up from here to here before going back here. Yes, that's what you're expecting. Or it can likely move from here to here, then go down. Any of these two can happen tomorrow. Any of these two can happen what? Tomorrow. So that's what I'm expecting on 4 hour. Now let's see whether we have a key this thing on. Okay, so as we can see, we have a very important zone here on what? H1. So therefore, I think price will reach just this level and then bounce down. But any of these things, you wait for confirmation. Because if you don't wait for confirmation, price might come or might take you out before going your way. So you wait for confirmation to what? Sell. You wait for confirmation to sell to the next zone. It's like 1.28, but maybe it can be 1.3 or something. Yes, 1:3 risk to reward ratio, 1:3. So price come back to this zone, gives us a what? An evening star or a bearish engulfing candle. Then we write it down. That's as simple as that. So this is what I'm also expecting from GP, JPY. GP, JPY. Yes. So that's it. I think our time is almost up. Do you have any other question for me?
Okay, so the risk to reward ratio, are you the one to choose it yourself, or when you're about to place the trade, That is when it counts or what?
Okay, so you are the one to choose it yourself. For example, have you seen we had this zone right here. Price price came and went up, came and went up. So now it's a good zone. So when price broke it and came back up, let's see whether we'll find an entry there very quickly before we get shut down. So when we come here, we see that price came but didn't give us an entry. We didn't see any bearish engulfing, nothing. But it came up again and gave us what? An engulfing candle, bearish engulfing candle. So after it closes, that's when we trade. Now we'll put our stop loss above it. Then we'll look for 1:3. That's what we do. You get it? So that's it. So you have to set it per the risk after your confirmation. So sometimes your confirmation can be a very small candle, which will give you your small risk. You get it? But here, the risk looks bigger, which can be 50 pip stop loss. You see, it's 50 pip stop loss. You get it? So it depends on your candle formation. When your candlestick formation is smaller, so that's why sometimes some people go towards a smaller time frame to find an entry. So you see, on a smaller time frame, I've still found an engulfing candle, but here, very early, and it's a tiny one. So you see, right now, if I'm riding that one straight down, it gives me what? 1:6 instead of the 1:3 on a higher time frame. It gives me 1:6. That's why we normally go to the smaller time frame to take entry. It gives me 1:6. So this is where my 1:3 will be. So you have to choose. You have to choose. And if you see that your risk to reward is not where price will hit, is not giving you your 1:3 or 1:4, you can decide not to take that trade and wait for another setup. You get it?
Okay.
Wonderful. Any other question?
Okay, but in demo you will not see this. I don't know if
Okay, so you see, one of the things is you will not see which of them will not see. Is it this tool?
like the risk to reward ratio, you will not see it on demo.
Okay.
When you're
So,
when you're
so
about to place a trade using a demo account, you will not see this.
no, you will see it. But the thing is, it has this, they don't have this tool on Meta 5. So you actually have to do your analysis on what? Uh, Trading View. Then you now come and pick the coordinates, which is on Trading View for your entry. Do you get it? So on Trading View, when you come here, you see that sorry, I'm coming. When you click here, you see that the green is showing here. There's 100 and what? 89. 189.99925. That's your take profit. Now this red, 190.720, that's your entry. And the 190.982, that's your stop loss. So when you now come and analyze here, you go to your MetaTrader where you place your trades. Then when you enter the trade, you come and put this stop loss at the same stop loss there. Then the take profit at the same take profit there. Then that's it.
Oh, okay.
Okay. Don't worry. So you, as time goes on, I will, when you're going to place a trade, I will guide you on the platform. Okay. So that
Oh,
you know how to go
okay.
about it. Okay. So if there's no other question, I would like to close here because our time is almost up. So if you have any other question, you can also ask on the page.
Oh, okay.
Okay, wonderful. Thank you for joining.
All right. Thank you too.
You're welcome.